This is Joshua Martinez, and I'll be your host and your presenter for today's presentation. I want to go ahead and say thank you to each and every one of you for allowing us to be part of your continuing education growth. Ladies and gentlemen, if you could please be so kind, type in a yes into the question section box, just letting me know that you can hear my voice. And the screen in front of you shows welcome to 20 for 2, number 18. We will start at 6 a.m. Fantastic, fantastic. Thank you, everyone, for the confirmation of both the audio as well as the visual. This presentation should last anywhere between an hour and 2 hours, depending on what we have to cover inside the live market. We're going to first kick off the presentation with viewing yesterday's trades, all of their setups, and we're going to review what happened in the last 24 hours, the appropriate steps from the plans, and see where we are. Yesterday was all about scalping, swing trading, swing traders. There are no setups as of yet. We are waiting for the swing trades to set up, and that's going to take a few days. So we've been taking a scalping approach, and it seems that the scalping approach works very, very well, especially for those of you who waited for the appropriate entry. As always, before we get started, it is important that you understand there is risk involved in trading the Forex market. You should never invest money that you cannot afford to lose. Always keep equity management in mind. Understand that we are not CTAs, which stands for Commodity Trading Advisors. And what that basically means is we are not money managers, and we are unable to trade for you. We're here to empower you, teach you, educate you, inspire you in making the best decisions for yourself. So, with that being said, let's go ahead and get started. So, fundamentally wise, we had our 5 a.m. consumer price index come out for the euro. So you're going to see a lot of market movements with the euros, a little bit of Great British pounds. You have interest rates coming out at 10 a.m. Eastern Time for Bank of Canada. Don't forget this Friday is non-farm payroll. So tomorrow, Thursday, for those of you who are in longer-term trades, you may want to think about looking for profits towards the end of Thursday. This way, you're not sucked into the potential fast market movements that non-farm has to offer. Non-farm payroll is pretty straightforward. It can move the market anywhere between 100 to 300 pips. It has usually moved the market with like 50 pips within seconds when it first comes out. Huge spikes, and has been known to be a new trendsetter to push the market either up or down for most of the month. So let's go ahead and jump into the live market. Okay, so when we last left off, we looked at yesterday a handful of currency pairs. We looked at the Euro Australian dollar, Australian dollar Swiss franc, Euro JPY, New Zealand dollar US dollar, Australian dollar JPY, Great British pound New Zealand dollar, Euro US dollar, and NZD JPY. We had setups on the Euro Australian, Australian dollar Swiss franc, Euro JPY, Australian dollar JPY, Great British pound New Zealand dollar, and even the NZD JPY. And so what I would like to do is I would like to cover these and see what the last 24-hour movements were and what we could have done, and then we'll go back and do the same thing that we did yesterday today and set up a bunch of scalp trades. So there was no swing trade, so there's no need to view the larger time frames at this point in time. We'll just review the trade setups in which we talked about yesterday. So yesterday, 24 hours ago, we talked about the Great British pound NZD. We discussed how this market was in a down ABCD swing off the 15-minute time frame. We discussed how it's making lower lows and lower highs, and counter trend line breaks is what's working. And so we said that because the swing trade was not available, the scalp trade is what we would look to go after. We discussed selling the market right then and there, placing our stops 15 pips above the highs of U-turns with a risk of about 50 pips. We did have a solid limit of 2.2584, which is about a 96 pip reward. So let's see what happened. Every candlestick represents 15 minutes worth of trading, and it seems as if this market did a pretty decent job making lower lows and lower highs. And by 10:30 a.m., there was 96 pips made. So go ahead and type in me if you were the trader that was able to take advantage of the Great British Pound New Zealand Dollar scalp trade. And how many pips were you able to walk away? Were you able to capture the full 96 pips, or did you close out early? Did you get in a little bit later? What was your overall results? Mac made 89 pips. Anna made 86 pips. Al made 75 pips. Lisa's closed early, made 21 pips. Not a problem. MICH says made the full pips. Closed out with 91 pips. Congratulations. Melvin, 102 pips. Looks as if you got a better position than we did. Congratulations, sir. Douglas made 50 pips. So all in all, a very, very profitable trade. Very happy with it. Trade is over. So what I'm going to do is scalping. When you do scalp, what you do not want to do is continue on. What I mean by this is, what you do not want to do is say, okay, well, the D extension is fulfilled, let me draw the new down 80 boundary. You don't want to do that, because scalping is all about what's going on right now, how do I make money right now. You do not have a bias with the Fibonacci's on the 15-minute time frames. You do not have overall commitments in one direction. Go ahead and type in a yes, you understand that. And so basically what I'm saying is, we're deleting everything. And a scalper is a one and done. You place one trade, you're done, and then you have to restart your entire analysis. It's not like swing trading where you commit to an overall direction. Because the moment that this market reverses, the moment that a scalper reverses as well. So we'll come back and revisit when we do on-demand requests. The second thing is going to be the Australian dollar JPY. Australian dollar JPY, we talked about this 24 hours ago. And 24 hours ago, we said we're waiting for the market to break the uptrend line, then enter into the sell zone, form a high lower than the last high, counter trend line break, bearish, looking to sell the market. So here's my question. Did the market break into the sell zone and form a low, followed by a high lower than last high in the sell zone, yes or no? No. Right, Julian says no, Elise says no, Anna says no, Melvin says no. There was no trade. We drew it out. So basically, we're looking for the market to meet the backside of this trend line. So this was referred to as a no trade. In scenarios like this, the traders who end up losing are the traders who entered in too early when they jumped the gun. And they are truly, they are the victims, which really stinks, but they're victims of traps and victims of emotional hijackings to where, and all traders go through, it's part of the learning curve, but you get so darn excited about the potential move, and because we know that we're hitting resistance off the daily time frame, that you're excited, you're so excited that you jump in early. But jumping in early doesn't pay consistently. Jumping in early is not reliable to generate income to cover, your accomplishments. So, for example, what I mean by this is, if you're looking for retirement income, if you're looking for replacement income, if you're looking to have your mortgage paid for, you're not going to be able to accomplish that consistently by jumping in too early. Okay. We will revisit this. We still have, looks as if we may be breaking, well, we are breaking resistance right now off the daily. So we will have to come back to discuss what's next move, but it looks as if this is moving very fast and aggressive. The only thing that's going to push this market back down is either going to be resistance at the 1.18 or the 1.27, or this market may go all the way to the 1.68. But we'll have to revisit this. Next on deck is the Euro JPY. We'll push this back, and we'll discuss 24 hours ago. So 24 hours ago, we discussed of how there was strong levels of support and strong levels of resistance. We discussed how there's resistance is at 130.75, and then we discussed how there's support is at 129.75. We gave a limit of 129.80, and we gave a stop that's 15 pips above the highs of U-turns. Entry, waiting for the market to touch resistance, then looking for the market to break the counter trend line, then looking to sell. So, let's zoom in here and let's see what happened. Did the market touch resistance? Yes or no? Basically, what we're doing right now, everybody, is we're reviewing the trade plans that we did yesterday, and we're walking through candlestick by candlestick of what you should have done. Well, yeah, we touched it. You know, I would consider this a touch. It's not like we took it out, but we typically don't want it to be taken out. So the market touched it. And then did we break the counter trend line bearish towards the south? Okay. If we place our stops 15 pips above the highs of U-turns, which would be 77, 87, 92, and we look at the risk versus reward, the risk would have been 60 pips. The reward would have been 51 pips. Is this a good trade? Risking 60 pips to make 50 pips? No, because you're risking more than you're making. So this is a bad trade. And you have to understand that sometimes that will happen, because technically, it is exactly what we wanted. You know, with the market touched resistance, broke the counter trend line, so entry-wise, it was perfect. But risk versus reward-wise, it was not perfect, because the risk involved in this trade is 60 pips. The reward is only 50 pips. We don't risk more than we make, or we don't risk more than what we want to make, and so therefore, this is something that you would have to pass on. Now, let's see what has happened since then. When the market pulls back up, what you could do is you could say, well, you know, we're just going to take another counter trend line, and let's see if we can get a full body entry. Okay, so does everybody see this long wick towards the north? Yeah, Max says we're looking to make money, not to win trades. I couldn't have said it better myself, Max. So this is a nice sign that a bearish move is to come. According to the trade plan that we developed, we do want the market to break the counter trend line. And then we just broke the counter trend line here, just now. And so if you were to look at the risk versus reward, 92, 102, 107, and we look at our risk of 70 pips to make 56 pips, This too is a bad trade. And this is the live market. And so this is a wonderful example of how you take the time, of how you're intentional, of how you wait for the proper setup, and then unfortunately, the entry itself eats up most of your profits. So on the Euro JPY, though we would like to sell this market because of the entry is exactly what we want, the risk versus reward or equity management does not make sense. This trade will be risking 70 pips to make 50 pips. Type in a yes if you understand that there is no trade on the Euro JPY simply because of bad risk versus reward. Okay, perfect. Okay, so we'll move these out of the way. We'll look at the Australian dollar, Swiss franc. We'll look at the trade plan from 24 hours ago. And 24 hours ago, we discussed and said, we actually made it very, very simple. We just said, look, here's the D extension, which is our limit of 0.7544. Our stop's going to go 10 pips below the low U-turn. Entry is going to be a counter trend line break. Did the market break the counter trend line? Yes or no? It did. So there's the buy. Stop will go 10 pips below the low U-turn, which will be 83.73. This is just an aggressive market. That's all this is. The risk involved in this trade would be 30 pips. And that's pretty normal. That's a pretty solid scalp trade. You know, scalpers are used to having smaller profits, so let's see what happens. The market begins to push. Now, it would not surprise me if many scalpers decided to close out early, especially with this hesitation. If you held onto your position, that's fine. But here you currently are now. So as a scalper, the market pushed your way about 35 pips. Currently, you're up about 19 pips. You have literally about 22 pips left to go. Okay. How many of you took this trade? This one's still open. You should be up around 15, maybe 20 pips. Depends on where you got in. AUD, Swiss franc. It's open. No, 19 pips. Okay. Melvin says I took 28 pips off it. Yeah, and that's pretty normal for scalping. You know, the scalper, it's like we talked about yesterday, you get in and then you probably close out a hesitation. Okay, Euro Australian dollar. We are looking for the market to break the downtrend line and bounce at the backside of the trend line, but the market never did so. The market just kept falling. So the Euro Australian dollar is a no trade. No setup. The New Zealand dollar JPY provided us our counter trend line break, bullish. We placed a stop 10 pips below low, U-turn 74.64. The risk involved in this trade was 23 pips. Our limit was the 1.618 extension, in which we're still in the open trade, where the reward is 35 pips. Currently, you're positive 14 pips, minus your spread, so like 10 to 14 pips. Open, 14 pips. So, let's recap. Because for those of you that like to be scalpers, we're going to take a scalping approach today again because the swing trades are not ready yet. We're still waiting for our swing trades. We're still waiting for those high prices. But as a scalper, you need to understand the expectations of your monitoring, okay? Yesterday, we analyzed the Euro Australian dollar, Swiss franc, the Euro JPY, the New Zealand dollar US dollar, the Australian dollar JPY, the Great British Pound New Zealand dollar, the Euro US dollar, and the New Zealand dollar JPY. We analyzed 8 total currency pairs. Out of the 8 currency pairs, let me go ahead and I'm gonna type this out so everybody can see this. We'll just do Great British Pound US. Okay. Yesterday we analyzed 8 pairs. Okay. Out of the 8 currency pairs, we created 1, 2, 3, 4, 5 trade plans. Found 5 trade plans. Out of the 5 trade plans, we had 3 trades open, and then we had out of the 3 trades that were triggered, these are our results. 1 trade equaled 96 pips closed. 2 trades still open for give or take 30 pips. Go ahead and type in a yes if you see the breakdown of all the work that we did yesterday. Yesterday we came in here and we said, hey, there's no swing trades. There's no swing trades available, so let's go for scalping. We had to analyze 8 currency pairs. We found 5 trades in which we created trade plans. Of the 5 trade plans, 3 trades were triggered, which we had open positions. Everything else, nothing triggered, okay? And then we had 1 trade close where we made 96 pips. That's on the pound NZD. Then we have 2 trades that are still open, which are the Australian dollar, Swiss franc, and the New Zealand dollar JPY. What you need to understand is that when you decide to become a scalper, you will be analyzing a handful of currency pairs. You'll be creating a handful of setups and trade plans. but not all of your trade plans will be triggered. Some trade plans will just won't follow through with your entry. That's fine. Those are called no trades. And some trade plans, you'll wait for it, the entry will be perfect, but equity management won't make sense, so you have to pass on it. That happens as well. But what you're going after is what you're doing is you're filtering through and you're only identifying the highest winning percent trading plans, and you're only taking those plans. It's those entries in equity management that's going to allow you to find your success. Okay. So that's what happened yesterday. Current status from yesterday's is 96 pips of closed positions and 30 pips of open positions. Swing trading still not available because we're still waiting for the entries. Let's do another round of scalping. Go ahead and type into the question section box the currency pairs of your choice. I'll go ahead and write down them on the sheet of paper, and we'll do 4 at a time. Okay, the first one is from Mac. Write this down. It is the U.S. dollar index. Debbie, that's for the U.S. dollar JPY. Julian's asked for the NZD Swiss franc. Rick has asked for the USD CAD, and we'll do these first 4, and then from these 4, we'll do another round, and we'll do 4 at a time. I don't want to write down, 8 or 10 if I can't get to them, so I will do 4 for right now. Excuse me. Okay, so we're going to pull up the U.S. dollar index. We need to find out what's going on. What's happening here is we have what's called a consolidation breakout. And this is the monthly time frame. And we did very, very well off of selling resistance, but now we are clearly above resistance, and now we are in the buy zone. This is not falling within characteristics of the U.S. dollar, simply because we're such a high price, the market hasn't waved down. What's the question that's on my mind is this a true breakout? The reality of this is this market going to continue up fast and aggressive, or is that a false breakout, and is it going to come down to 11,009? I would like to see it to move towards 11,009. It would make a lot of logical sense. I think it will bring back order into the runs. Excuse me. But we'll see. Analysis is analysis. At the end of the day, we have to try to remove our bias on what we want out of the market and listen to what the market is saying and doing. That can be a tough thing to do as a trader. And so right now we will recognize that the bulls have pushed the market up. We will look at the daily time frame. The reason why I looked at the monthly is just because I wanted to see what's going on. I haven't looked at the U.S. dollar index in a little bit. But when you look at the US dollar daily time frame, this has been the year of the channels. Let's see if we get a channel going. And we have somewhat of a channel. You know, we have our levels of resistance, 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 support, support, support. So technically speaking, this market is wanting to fall down bearish. Still, it still shows lots of signs. Even if we can just get a nice little push towards the south, that would be nice. But like I said today, we're not going to focus on swing trading. Swing trades are not ready across the board. I viewed a lot of them. We're going to be looking for scalping. We'll keep this in mind. For those of you who are going to be basket trading, just understand that basket-wise, you may be seeing a bearish push on the US dollar. It only logically makes sense that the market's going to fall bearish percentage-wise. Okay, so we'll go ahead and take a look at the US dollar 1 hour time frame. And the key to scalping is only focusing in on the current structure and not worrying too much about the bigger picture, because the scalper really doesn't care about the big picture. The scalper is just saying, hey, look, I'm just looking for the next trade. What's the next trade? Here is the sideways movement. Whether you are a scalper or whether you are a swing trader, really doesn't matter. The optimal areas to trade consolidation will be to buy, support, and to sell resistance. Okay? This market is moving from resistance to support. So if we draw our latest down ABCD swing, we can see clearly that the market is starting to move towards the south. A scalper, very simply put, is going to anticipate and expect to sell the next counter trend line break bearish. Why? Because the market is making lower lows and lower highs, lower lows and lower highs, lower lows and lower highs. Bears are in control. We're moving from resistance down to support. You can see there, you can see there, you can see there, you can see there, and we'll wait for the next entry towards the south. So counter trend line break bearish, and that will get us in selling on the US dollar. In regards, I'm not going to basket trade this, but if you have the ability to trade this outside the United States, this is a good little currency pair to trade. And you can go after, place your stop 15 points above the high, 69, 79, 84, and let's see if there's enough profit. 28 for 28. Okay, so a new plan. There's not enough profit to be made, and so we're not going to be able to sell this. We're past the point to where selling is a bad idea. You're going to have to wait for the market to come back down to support and then look to buy it back up. So Mac, can you go ahead and type in a yes if you understand that? Basically what I'm saying is there's not enough money to be made towards the south here, you know, because you're at a 1-to-1. You're going to have to wait for it to hit support again, and then you can look to buy it back up or expect the US dollars to go back up towards north. Okay, let's go ahead and move on. And that's the US dollar index, so you know, we don't typically provide stops and limits. We use the US dollar for direction. And so this just basically means, hey, we're going to expect US dollar weakness for a little bit, and then once it touches this critical area, we'll expect it to go right back up towards north. So I'll put no trade. USD JPY. Let's take a look to see what the daily time frame is doing. Julian says, hey Josh, the AUD JPY hit the D extension. We can take a look at that. We have a handful of currency pairs that we want to view before we get to that area. But if that's your trading style, you know what to do. You have a strong trade plan as well. US dollar JPY down ABCD swing. Bears are currently in control. Your Gartley looks as if your Gartley may match this 1.618. We do have this down swing still, or this down trend line still in front. USD JPY is a tough currency pair to analyze. We talked about this yesterday, this being a tough one. The inner trend line did break, so it could be a little crown formation, but the market, this low is 122.222. Yeah, these lows are 25. The market did not tick out these lows, and so a lot of investors are going to look at this. They're going to say, well, is this a bear crown? There's not enough information on the US dollar JPY daily time frame, in my opinion, to warrant a swing trade, simply because, number one, we are in a downtrend. We are in a down AB boundary. We are expecting the market to fall. But of the pullback, we are in the up AB boundary. 1.618 extension hasn't been hit, or the downtrend line has not been hit. If we were forming this left tip, center tip, potential right tip, but the center tip was touching the downtrend line, I would be all over this for a swing trade. Go ahead and type in a yes if you understand that. Basically what I'm saying is if this center tip was touching this downtrend line, I would be all over this and say, this is a no-brainer, let's look to sell. But it's not. And so it's going to make this naturally a higher risk trade, as into, hey, this is probably just a false trend line break. But that's why we're not swing trading right now. We're having mixed signals across the board. We're going to go ahead and take a look at the USD JPY 1 hour time frame to see if we can find this scalping opportunity. Now remember, swing trading, the setups are not clear at this point in time, so we're turning to smaller time frames to look for scalping opportunities. Scalpers really just don't care what the long-term movement is. They're looking at the here and now movement, the here and now opportunity. So let's go up AB boundaries. AB boundaries shows that the US dollar JPY 1 hour time frame is still in an up AB swing. Of this latest trend, the market did break the downtrend line, and now we're in the buy zone. This is a pretty straightforward scalping plan. All you need is the USD JPY to come down, touch the backside of this trend line, and then you could utilize a counter trend line break and buy it towards north. Just like this. And you'll probably even receive a new uptrend. Low, low, low. So nice little convergence there. Let me go ahead and type this out. Entry. Waiting for the market to form a buy low price, then looking for the market to break a counter trend line break and close above the counter trend line bullish. Stop will be 10 pips below low of U-turn. And so if the market is to U-turn at the backside of this trend line, 87, 77 would be the stop. The risk involved will be about 20 pips. And the reward will be the 1.618 extension. So the limit will be 123.66. And your reward would be somewhere around 70 pips. Go ahead and type in done, D-O-N-E, when you have this trade written out. Ken says, should you allow for the spread instead of just 10 pips below? Great question, Ken. The reason why we do 10 pips below is because these are bid charts, which means you're the sell price. See, when you enter into the market buying, you're going to enter in on the buy price or the ask price. And so therefore, you've paid your spread up front. And so you're going to be looking at the bid. So the reason why we're able to do 10 pips below is because we've already taken into consideration of the spread. Now, if you enter in selling first, this means you are, this means you have to exit on the buy, which means you're not going to see the ask price or the buy price. And so if you're selling first, that's why we do 15 pips above the high, because we add on an extra 5 pips for the spread. If you, as a trader, feel that 10 pips is not enough and it doesn't make you comfortable and you would like to increase it, absolutely you can do that. You know, you can bump it up to a generic 20 pips, 30 pips below your U-turns or above your U-turns. But in regards to compensation, we already teach that with 10 below and 15 above in correlation of the bid and ask. Great question, by the way. Steven says, do you set up alerts to notify you that the trade is closing to make? I don't, simply because of my occupation. I'm in front of my charts all day, so I have the opportunity to watch this. But if I was going out of town, if I was going to be in my vehicle traveling, if I was going to be away from my computer and I did not want to miss the setup, absolutely, hands down, I would be utilizing alarms. Okay. So this is the USD JPY. We have about 70 pips that could be made if you have the appropriate setup. We'll move on to the NZD Swiss franc. You're very, very welcome, Stephen. NZD Swiss franc. And the NZD Swiss franc has less than 2 bounce, no D extension being fulfilled. We're hitting the 1.18, 1.27, but we're still very fast and aggressive. This market looks as if it's heading towards the 1.618. It is naturally a high price, so I am hesitant about trying to swing trade this right now. So for example, what I want everyone to do is think about this for a moment. Okay? This market's going up. When markets go up, if you can just stay focused in on buying low prices, you can be pretty profitable. Type in a yes if you can spatially see this. Low price, low price. All these low prices weren't really great buys, right? These are all low. Buy low in an uptrend. Right now, you're at a high price. Now, as a swing trader, you don't want to trade against the trend. You don't want to do that. A swing trader, what you want to do is you're going to want to wait for the market to pull back, and then you can buy low again. That's what you want. So a swing trader wants this. Type in a yes if that makes sense for swing traders. It's pretty much like this across the board. And this is the reason why that we are not placing any swing trades right now, is because there's no swing trade setups. We have to wait. This market, it looks as if it is heading towards the 1.618, so because it is fast and aggressive, about 200 more pips towards the north, 270 pips. And so a scalper is going to be able to take advantage of this movement, potentially. So when we look at the NZD Swiss franc, and we bring up the 1 hour time frame, a scalper is going to say, hey, you know what? What's the current move? The current move is bullish. We have an up A, B, C, D swing. Bulls are currently in control. The next D extension will be this. 0.6905 is D extension. And a scalper is looking at this, they're saying to themselves the following. Counter trend line break, counter trend line break, counter trend line break, counter trend line break. Look at all these entries on counter trend line breaks. Counter trend line break, counter trend line break, counter trend line break, counter trend line break. A scalper is going to do the same thing. Counter trend line break. Buy, 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 buy. All of these would have worked out. So we're going to do the same thing. Here's the entry. You're going to wait for the market to close above counter trend line. And that's the buy. Entry. Waiting for the market to break and close above counter trend line bullish. Okay. I want to ask this question because I think some investors may be overthinking this. Okay. And that happens when you have great education. Sometimes you can overthink things. All I want you to say is yes or no. If you would have bought these counter trend line breaks in the past and had appropriate stops, appropriate limits, do you think you could have made a profit? Yes or no? Alice says yes, Robert says yes, Michael says yes, Paul says yes, Doug says yes, Julian says yes. Majority of everybody says yes. That's what we're doing. Okay? We're not looking to complicate things. Okay, we're not looking we don't really, honestly, we don't really care, what the latest support and resistance is, what's the latest Fibonacci is. It really doesn't matter too much to us what the latest candlestick formation is, because as a scalper, you're just basically saying, hey, look, the 1 hour time frame is going up. I just got to get in. Okay, I got to get in when it starts to extend. If bullish candlestick formations extend your way and that's what makes you money, then use them. If counter trend line breaks help you find the extension, then use them. Well, that's basically a scalper's mindset. Scalper's mindset is very nonchalant. They don't care about the big picture move. They only care about the next trade. They don't care if you're trading with the trend. They don't care if you're trading against the trend. Scalpers don't care if you're trading from C to D or from D to C. They just want the next move. And right now, it's a scalper's market. Swing trading, we're still waiting for our entries. But right now, it is a scalper's market. So these are scalping setups. So stop. Stop will be 10 pips below low of U-turn. Let's just say the market U-turns right now. This would be the low U-turn to 27.17. The potential risk involved will be about 25 pips. Your reward will be your D extension. Your reward is going to be right around 60 pips. The biggest thing that we want, okay, above all else, is an appropriate entry. Okay, we do not just jump into the market now. It's not a good idea, because what if the market falls bearish? So you want to wait for the appropriate entry. And number two, when you do receive your entry, is your profit larger than your risk? That's what we want. Go ahead and type in done, D-O-N-E, when you have this set up. This is going to be worth about 60 pips for you. Now, yesterday, we had to analyze 8 currency pairs. We had to come up with 8 trading plans. We had to analyze 8 currency pairs. Out of the 8 currency pairs that we analyzed yesterday, we found 5 trading plans. Of the 5 trading plans, 3 triggered. We made 96 pips, and we have 2 trades still open. So, as a scalper, we're going to more than likely follow the same concept today, to where if we can find 5 trade plans, we may be able to put ourselves into a position to make about 100 pips, another 100 pips, which would be great. You know, making 100 pips a day is really great. HB asked the question, do we enter in on, or do I enter in on the close, or do I enter in on the test? I try to enter in on the close, but let's just say the close of the candlestick is extraordinary large. It's just like 40 pips and it eats up all my profit. Then I'll have no choice but to wait for the test. But if it's just like a normal close, then I'm going to go ahead and get in. Really, really great question. Okay, let's look at the US dollar, Canadian dollar. And then we'll do the next round of currency pairs after we look at this. Hey, good morning, William. What question can I answer for you, my friend? The latest swing on the US dollar CAD is in an uptrend. Says position traders should hold through Friday non-farm. Yes. If you're a position trader, fundamental announcements don't matter to you. You know, you're kind of there. You're going to notate them, but they're not. If you are a position trader, fundamental announcements realistically do not dictate whether you exit your positions early or not. You're very, very welcome, my friend. Okay, so as a swing trader, you're interested in this, buying low or getting this D extension. So since buying low is off the table, okay, since buying low is off the table, we have to wait for the D extension for the swing. And who knows how long that can take. So we have a few days away. Wow, congratulations, William. Great job, my friend. Great job. Way to go. Way to go. What we're really focusing in on the US dollar CAD is this most recent movement, because it's going to be this characteristics that's going to allow us to generate the profits. Okay? This is what we're going to be looking at on a smaller time frame, but I wanted to show it to you on the daily first. The channel. Look at this. This is beautiful, right? Very, very pretty. Type in a yes if everybody can see this very beautiful and pretty channel. This is what we're going to scalp on the 1 hour time frame. This is what you're interested in. You're not interested in anything else as a scalper. So let's go find that on the 1 hour. May even be able to turn to a 15-minute time frame. But it's about 100 pips each way. It's the definition of a scalping area. Joe says, not sure if I heard your response from my earlier question about the swing trade for the GBP AUD. Did you receive my details sent earlier in the day? Just wanted to confirm my analysis is compelling to trade it. I sent the email to. That's the wrong email, Joe. I'm going to go ahead and send this email to you. Now, just keep in mind that there can be a delay with my response, simply because, not because I don't want to answer, just because of how I don't want to say busy, but productive I am throughout the day. Oh, you're very, very welcome, my friend. Okay, so we're going to bring on the 1 hour time frame. We're going to link. There we go. Perfect. This is the channel. And I really dislike trading in the middle of the channel, because it's just so darn wild. Like, for example, to me, it's just makes so much sense. You know, just logically makes so much sense to wait for the market to touch the blue level to buy it, blue level to buy it, blue level to buy it, to touch the blue level to sell, to sell, to sell, to sell, to sell, to sell. Anything in between is just, you know, just so much more risk involved, you know? And so I know we want to analyze this, I know we want to trade this, but this is too noisy for me. We do have a flagpole pennant. Here's the pole, here's the flag. So for me, I would rather waiting for the market to touch one of the blue lines. Either touch support or touch resistance. Go ahead and type in done, D-O-N-E, when you understand that I'm not trading the USD CAD. This is just too noisy for me. All right, so Shaka says, when you're trading and the D extension simultaneously hits and your fibs overlap one another, which fibs do you use to get back into the trade, because sometimes they are a little off? Says, when you're trading and two D extensions simultaneously hit. Well, great question. Always use the capital ABCD swings. You may have sub ABCD swings and capital ABCD swings, D extension of the line, which are perfect. That's a wonderful convergence. And when that happens, you need to understand that the sub swing is over and then the capital D is going to take over. I mean, the capital swings will always take over. Because, you know, your sub swing could just be there to help you get to your capital D. And then once that capital D is hit, your sub swing becomes obsolete. It doesn't matter anymore because it served its purpose. And so always follow the capital. When D extensions are hit, always follow the capital ABCD swing for your new AB boundaries. Your sub swings are over, they're done. They serve the purpose of helping the market get to the capital D, and once that's done, it's done. If you don't know what your capital ABCD swings are versus your sub ABCD swings, then that's going to be an education problem in which you're going to have to do either A, some more research with your UTP, or B, get into Analyst on Demand. And what they can do is they can help you resolve it. Great question. Really, really great question. Okay. Now, we looked at the USDX, where there's no trade. We looked at the USD JPY, which we have a 70 pip trading plan. The New Zealand dollar Swiss franc, which we have a 60 pip trading plan. And then we just looked at the US dollar CAD, where there's no trading plan. Go ahead and type into the question section box. Go ahead and type into the question section box the next round of trades that we want to look at, or currency pairs. Shaka says sometimes it's two subs. If there are two subs, then you're going to want to use the sub swing, because there shouldn't be two subs. It should always be your capital AB boundaries, then your sub AB boundaries, and then your sub AB boundaries, and then your sub. There will always be a dominant swing, and you're going to want to find that dominant swing. The dominant swing is usually the larger swing, but whenever you find yourself using too many sub swings, what you can do is you can always erase them and just stick with the capitals. And capitals are designed to have your higher winning percent trades in directions. And then you can just focus on entries. Okay, so let's take a look at the following. Rick has asked for the NZD USD. Okay. Charles has asked for the Euro CAD, Euro CAD. Melvin has asked for the Australian dollar, US dollar. Dave asked for a plethora, but Dave, we have the Euro CAD. We'll do the, looks as if you're just focusing more on the CAD, pound CAD, Euro CAD, pound CAD, Euro CAD, pound CAD. Okay, we have the Euro CAD. We'll add in the GBP CAD. Okay, so we'll stick with these four: NZD USD, Euro CAD, AUD USD, and GBP CAD for the next round. Shaka says with fundamentals, if it's bad or good, is the movement just for the immediate time being, or does it completely switch the trend? No, I'm not a believer that fundamentals have the power to change trends anymore. Fundamentals have the power to move the market within, a 3-hour period, sometimes a 7-hour period. But it's going to be more of your disasters that's going to move the trends. Tsunamis being hit, earthquakes, a major leader dying or passing, or a scandal in the government. That's the kind of stuff that's going to completely reverse the trend. If this was 20 years ago, and we didn't have modern technology, we didn't have internet the way that we did, that we don't have, if we didn't have smartphones or the ability to read charts like we do now, then yeah, I would say, fundamentals are going to be your trend setters, because that's your driving force. But there's too many technology factors that come into play, and there's too many traders that look at technicals to allow fundamentals to drive the markets anymore. Okay, so let's look at the NZD USD. A really great question. Michael says, hey, good morning. This week you have focused on scalp trades. What is it about this week, market structure or news or whatever, that made you decide that this week is for scalping and not position or swing? Just trying to understand your thought process. Thank you. Oh, great question. Very great question. This is the prime example. This is what we're seeing across the board. So we have on the NZD USD, we have a really nice crown formation. We have, it's very beautiful. Left tip, center tip, right tip. And because of this crown formation, and you should be able to see it now, our jobs here are we need to buy low, buy low. That's the job here. If there's a crown, if there's a reversal, we want to buy low. When we look at the current trend, and we see that the market is making higher highs and higher lows, higher highs and higher lows, we are too high to buy. And because we're too high to buy, we have to wait. We have to wait for the market to pull back and form a low price to buy. Type in a yes if this makes sense. This can take a few days to set up. So this is the reason why. I said, hey, look, there's no swing trading opportunities for us because, across the board it looks just like this. Swing traders, you're going to look at the market. If you're in an uptrend, you want to buy low. If you're in a downtrend, you want to sell high. Well, the markets are not in the positions of where we need them to be for us to activate our trades. And so, I could have came on here and said, hey, no, there's no trading this week, and we're just going to, not have presentations. But I didn't want to do that. I wanted to say, hey, even though there's no swing trading this week, there may be scalping. Let me show you how it is to be a scalper. And so this way you can see the big difference. See, swing traders, when you're hot, you're hot. When you're not, you're not. Swing traders is, hey, when you have setups, you're in. You're trading, you're trading, you're trading, you're trading. And then when there's no setups, you're waiting, you're waiting, you're waiting, you're waiting. A scalper, you can trade every single day as a scalper. But as a scalper, it's a filtering system. It's a filtering way of trading. You're going to be analyzing like 8 currency pairs. You're going to find 4 or 5 trade plans, and out of your 4 or 5 trade plans, 2 are going to trigger. Hopefully that answers your question. You're very, very welcome, my friend. Okay, so because of this, we're too high to buy. Keep in mind that we are hitting a level of resistance. Okay, so we will notate that on the smaller time frames, and we're going to turn to the 1-hour time frame, and we're going to look for the market to give us some sort of setup. Now, as a scalper, scalpers really just don't care. You know, scalpers look at this, they say, okay, I don't care if we're going up or if we're going down. Scalpers just say this. If we're going up, great. I'm going to try to scalp up. If we're going down, great. I'm going to try to scalp down. Up, down, so on and so forth. This is kind of the trend. You can kind of see it. It's very friendly. It's not too difficult to view, especially when you draw these big old orange lines on here. The scalpers looking at this, and they're going to heavily rely on buy zone, sell zones. Market broke the uptrend line. Broke the counter trend line. Scalpers in. Okay, this is a scalping trade. I'm going to give it to you right now. You have a down ABCD swing. Let's see if equity management makes sense. But a scalper, you'd be in already. You're selling the market. Stops go 15 pips above the high of U-turn. 69, 79, 84. Limits will be the 1.618 extension. Let's see if equity management makes sense. Risking 26 pips to make 26 pips. This is a 1-to-1. So this is not ideal with what we want, but this is the scalping trade. You're an hour or two. If you were, if we were here an hour ago, it would make sense. 20 pip risk for a 32 pip reward, but we're late to the party type of scenario. Okay, so the scalping trade would have been this. This would have been, we do have a stop at 0.6684, and we do have a limit at 6630. Limit at 0.6630. The appropriate entry would have been this counter trend line break. That would have required a risk of 20 pips. And your reward would be 32 pips. This is a perfect example of a wonderful scalp. 1 to 1.5. Excuse me, 1 to 1.5. Risk versus reward. But now, you as a trader, you need to look at this and say to yourself, if you enter in now, you're risking 26 to make 26 pips. You as a scalper, that is, hey, you're risking $1 to make $1. I hate doing that. I hate risking $1 to make $1. But, this is a good trade. So you have to ask yourself, is that worthy enough for you? For me, I would rather wait for it to retest this high. If it does happen, then try to get back in at a 20 pip risk and a 30-pip reward. Go ahead and type in done, D-O-N-E, when you have this written out. Question says, sometimes when we trade, we have good trades and setups, but sometimes different pairs go against each other. Do you still place these trades because it seems like when one is up, the other is down? So essentially, you would lose one to win another, or with your experience, do they somehow pan out? Anyways, great question. So you're basically saying, if I'm understanding this correctly, you're saying, hey, look, if we look at the pounds, or let's just say look at the U.S. dollars. Let's say you have the U.S. dollar JPY showing a buy trade, and then you have the Euro U.S. dollar showing a sell trade. You have the U.S. dollar JPY showing a buy trade and the Euro U.S. dollar showing a buy trade. They're historically are supposed to run opposite, but they're both showing buy trades. Do we still take the buys? If you have good equity management, risking $1 to make $3, absolutely take both buys. Who cares, right? Think about it. If equity management makes sense, if you're risking $1 to make $3, if you lose $1 in one trade and make $3 in the other trade, you're going to net positive $2. So that makes a lot of sense. Sometimes the markets do run against each other to where both the Euro and the U.S. will go up. So like the Euro U.S. dollar will go up and the U.S. dollar CAD or U.S. dollar Swiss franc will go up as well, which are weird days, but that does happen. But at the end of the day, what's going to combat that is equity management. Now, if you're risking $1 to make $1 and you do that, you're, in my opinion, that's just wasting time. Sometimes you will have spikes or whiplashes where you're going to lose both trades. Those are never fun, but they do happen. But the only way to combat that, Shaka, is to make sure you have good equity management. Perfect. Perfect, perfect, perfect. Okay, so we're going to go ahead and look at the EuroCAD now. This is 2 pips. Euro CAD. And this currency pair has been extremely annoying to me. Very frustrating to trade. Very frustrating to trade. The reason why is this is your D extension. The market went up, provided a false double bottom. Market spiked back down, only to go right back up. So swing trading wise, there's just no setup here. You can see that we're kind of just, it's literally just, if you're doing anything other than scalping this market, you're pretty much getting eaten alive. Swing traders are getting beat up, day traders are getting beat up, position traders are getting beat up on the EuroCAD. Scalpers, they're doing just fine. Why? Because, the reason why is because the next long-term commitment move hasn't been established yet. See, think about it. Your swing traders, position traders, and day traders, they look for the committed move. And if there's no commitments, you know, it can be difficult to trade. And so the EuroCAD is one of those difficult currency pairs to trade right now. Now, for a scalper, it's really simple for you. The question is, can we even trust this? Let's bring in more bars of memory. Bar memory. Yeah, there we go. That's what I'm looking for. outer trend line, inner trend line, like so. Not enough information for a scalper either. Okay, what do I mean by this? We're on the line. We're on the line. There's really not much I can do with this. We're on the line because number one, did we break a counter trend line? No, we haven't broken the counter trend line yet, bearish. So can't sell it yet. Number two, if we find support and it goes back up, we could break above. So I need more information before I can make a move. If the market does break or close below a counter trend line, bearish, we have to wait for this. Low, then a high, then the drop. If it does close above, we wait for the complete opposite. Up, then the bounce, then the rally. So literally, you have two trade plans that are going to mirror one another. One's going to be for a buy counter trend line break. One's going to be for a sell counter trend line break. Go ahead and type in a yes if you can visually see this. This could go both ways. Literally, this could literally go both ways. Entry, waiting for the market to break bullish or bearish, doesn't matter. Then a test with a counter trend line break in the new direction. Stops 15 pips above or 10 pips below U-turns. Rewards 2 times the risk. I cannot give you stops or limits or entries right now simply because I can give you entries, which are either this counter trend line break or that counter trend line break. Both would be good. Both are justifiable. We just need to wait for one or the other. Stops are simple. If you get a U-turn bearish, 15 pips above the high U-turn. If you get a U-turn bullish, 10 pips below. Type in done, D-O-N-E, when you have this written out. Take your pictures, take your snapshots. Okay, perfect, perfect, perfect. So, could go both ways. We'll look at the Australian dollar, US dollar, and then the pound CAD, and then we'll call it a day. Australian dollar, US dollar. Ooh, did we do it? Did we finally do it? Look at this. This would have been a nice 5-0 bounce. That would have been very pretty. Why didn't we see that earlier this week? 786 on its way to the 1.27. The Aussie US looks as if it's getting ready to extend another 87 pips. So we can look at the scalp this bullish. No swing trading opportunity. We're too high for swing trading. But if we look at the AUD USD, 1 hour, Very simple. Very, very simple concept here. I think everybody could appreciate this. Thank you so much, Joe. Hopefully you have a great morning. Thank you for joining us. We're just looking at the AUD USD and then the pound CAD. We're going to call it a morning as well. Don't forget, you can always contact your education specialist for the recording of these presentations. Counter line breaks are doing very, very well here. Counter line break, 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 break. Simple, 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 simple. We have a nice little up A, B, C, D swing. You're going to have to wait for the next D extension or next fib swing. There's no trade right now. HB, this is session number 18. There's 2 more sessions in the 2020, but then we're going to have those makeup sessions from where I went, from where we had Tyson fill in. So there's going to be a handful of sessions after that as well. So it'll be this week and next week. So next week should be the we'll see how trading is next week, because I don't really like trading past the 18th. I'll tell you this, there will not be any sessions the last 2 weeks of the month. MICH is, how can we get more sessions with you? We're going to have to see, because the sessions, as though they are really great and though they are really fun, scheduling-wise, they are a stress onto the schedule. I'll have to work it out with marketers as to if they want me to continue. But if they want me to continue these sessions, I'm not going to be able to work late like I'm doing. Sometimes I come in at 5 a.m. and sometimes I don't get to leave until 9 p.m. at night, and I don't like doing that. Number one, financially, I don't have to do that, and number two, I don't want to do that. Those are too long of days. But anyways, that's my problem, not your problem. We'll get it worked out, get it figured out. The Australian dollar, US dollar is making higher highs and higher lows. It's very simple. The neat thing about this is the market is pushing towards north. This is more than likely done. Okay. If we would have bought this, we should have bought it earlier this morning, but we weren't around this morning, so we wouldn't have bought it. Wait for this D to be hit, and then wait for the next counter line break towards the north. You're going to have to wait for the next swing. You can utilize the new up A, B, C, D swings as well. A to B. And this will be the new swing, probably right around the 5-0 retracement area. Okay? And that will be the buy that we want to go after. We're going to eyeball this. The reward could be the new 1.61 extension, and we'll place our stop 10 pips below low of U-turn. So we're going to type this out, okay? Entry. Waiting for the market to hit the current D, then look to buy the next counter trend line break bullish and use the new ABCD swing to find the D limit. And take the Fibonacci's off, it looks just like this. Let the market come up, let it hit the current D, let it retrace, buy the new counter trend line break, place your stop 10 pips below the low U-turn, 06, 96. Risk is going to be right around 30 pips. And your expectation of your reward should be about 72 pips in return. Okay, go ahead and type in done, D-O-N-E, when you have this written out. Absolutely, Michael, we'll do that. GBPs. Okay, we'll look at the pound CAD, and then we'll do an overview of the pound Aussie and the pound NZD with it. GBP CAD. This is sideways written all over it. We're still stuck at this uptrend line, which is the counter trend line break off the daily. When we look at the day, look at the 1 hour time frame, that's where we're going to potentially find the trading opportunities. Oh no, I have more. We'll get rid of the US dollars. No need to look at the US dollars. GBP CAD. One hour time frame. And very simple concept. Very, very simple, very straightforward. You can already begin to see it. You have your up AB boundary. Counter trend line break gets you in. Logically makes sense why this market's going to head up. Entry will be counter trend line break bullish. It's going to look just like this. I wouldn't try to jump the gun here. I don't think that's very smart. I understand we're hitting the downtrend line, the uptrend line, and buying the market now makes a lot of sense with limiting your risk, but it's not a good idea to enter in without a U-turn. We've discussed, we had many examples as to why waiting for counter trend lines prevent us from losing. Stop will go up 10 pips below low of U-turn. I'm going to use a different fib. The reason why is because of this consolidation. I want to use the low of the last push from support. So I'm going to use this current up AB boundary, which was the last time we touched support. So if it is to break bullish, it will follow this AB boundary. And limit will be 2.0249, 2.0249. $2.0249 will be the limit. The risk involved in this trade will be 53 pips. And the reward involved in this trade will be 119 pips. Please be so kind to type in done, D-O-N-E, when you have this written out. This is going to be a 119 pip trading opportunity. Okay, now this is a short-term move. This is a short-term move. This is not a long-term move. You are trading a short-term move. As scalpers, you just really don't care what your short-term moves are and your long-term moves are. You just want to know the next major move. Market is making higher highs and higher lows. You got an uptrend line, wait for the counter trend line break. If it happens, there's the buy. If it doesn't, then there's no trade. We looked at the USD index, the USD JPY, the NZD Swiss franc, the USD CAD, the NZD USD, the Euro CAD, the Aussie USD, Great British Pound, Canadian dollar as well. Of those 8 pairs, we were able to obtain a trade plan on the USD JPY, the New Zealand dollar Swiss franc, the New Zealand dollar US dollar, the Australian dollar US dollar, and the Great British Pound, Canadian dollar. Those are 5 trade plans. Of those 5 trade plans, you can probably anticipate between 1 to 3 of them to trigger. Which one? I don't know. Time will tell. Okay, and as promised, Michael, we'll go ahead and give a nice little glance at the Great British Pound NZD and the Great British Pound Australian dollar. Great British Pound NZD, this thing's like a rocket. This thing just keeps on falling, keeps on falling, keeps on falling. This is a runaway train. You are in a down ABCD swing. The next D extension will be this 1.618. In regards to reversals bullish, no signs of reversals bullish as of yet. This market on the pound NZD shows as if it may fall another 102 pips. Yesterday on our scalp trade, we were able to make about 96 pips off this. And a quick glance and a quick overview of the pound Australian dollar. This thing is on its way towards the D extension of the 1.618. It's about 500 pips left of opportunity. This thing is just falling and falling and falling and falling and falling. Doing a great job with the prediction. In regards to signs of pullbacks, no signs of pullbacks as of yet. We will bring in some Fibonacci's to help us identify it. We did just fulfill the D extension on the pound Australian dollar, 1 hour time frame, which basically means a retracement may be coming. But in regards to any major bullish U-turns, doesn't look as if it's going to happen anytime soon. And one last overglance, Michael, then I got to get going, my friend. Euro Australian dollar, 1 hour time frame. This thing is just tanking as well. Runaway trains. Next D extension will be the 1.618. And that is about 101 pips. Okay, did you learn anything today? Did you learn anything today? You see how the scalping approach can be pretty productive, but does require a lot of time. Are you able to average 50 to 100 pips, 1,000 to 2,000 pips a month, 50 to 100 pips a day scalping? Absolutely you can, but it requires your time. If you do not have the time to monitor your scalping, then scalping realistically won't work for you. So you're going to have to be a swing trader. But as a swing trader, you will place trades, and when the setup's there, you place your trades. When the setup's not there, you don't place your trades and you wait. Waiting's not a bad thing. Waiting is good. Not trading is still good trading. It means you're not losing anything, which means you're being disciplined. When you trade, you want to make money when you trade. You don't just trade to trade, trade to make money. And you trade to make money by following a set of rules, which is quite neat. Okay, everybody, thank you so much. This presentation has been recorded. Don't forget, this Friday is non-farm payroll. You can get this presentation upon request with your education specialist. And on that note, every day, helping traders find a way. This is Joshua Martinez out.